Hey everybody, welcome to the morning market briefing. It's Tuesday, March 17th, 2026, St. Patty's Day. Ben, missing some green over there, my friend.
I actually completely forgot.
Yeah.
Yep.
I guess you could argue that that is a very dark green sweater you've got on.
That's definitely
green.
green.
Definitely green.
Is it?
It's it's a dark room, makes it look darker. Hicks. Green belt. Okay.
Man, Hicks hates holidays.
It
Wow.
looks like Hicks is going to be pinching up a storm on young Benjamin over here. Watch out. Tom's got his green on. Any St. Patty's plans?
Survive the day, you know?
That's the plan.
I have one remaining Guinness. We bought
Wow.
a 12-pack about a month ago, and I have one left.
Man, you've been hitting it
Wow.
hard. Man, that's going to be a big night. It's my wife's birthday. Happy birthday to Amanda. If you're a listener to the call, let her know that we said that. I don't know that she dials in every day.
Who's we? I haven't said anything.
You know, yeah. As a reminder, April 1st, coming up now, what, 2 weeks out? 2 weeks from tomorrow?
Yes.
Yeah, 2 weeks from tomorrow, an event at our office, 12:30, free lunch, free time with the boys, and get to an opportunity to hear about the Jacobs Ladder Group. Check them out at thejacobsladdergroup.org. We're excited to partner with them and try to help them achieve some of the really ambitious work they're already doing. But
Do you think the founder there who will be speaking is Amy Odell? Is she potentially Irish?
It seems very likely with the Odell
Yeah.
situation.
yeah. So
Fair
all the more reason you should
Yeah.
be there, really. Yeah, if you're not wearing green today, that's a way that you can atone. So make sure to join us. Ben, Empire Manufacturing, new orders remaining strong.
Yeah, surprisingly so. I think we definitely received some economic data this morning that is favorable, and this is now more real-time economic data than we had, because previously we were looking at February and said, oh, February was pretty good, but it really is going to come down to March. Well, we'll continue to see flatbed tender rejections, which is a key measure of the health of the trucking industry, extremely strong. So that's a good read for an early cycle read on manufacturing and the
Quick,
industrial economy.
pause there real quick, Ben. Flatbed tender rejections.
So you have three types of trucks. You have reefers, which are
Don't fear them.
refrigerated vans. Then you have the dry van, which is most of the trucks that you see on the road, and then you have flatbeds, which is what it says. It's a
Hauling
flatbed
equipment. And
Yep, you see it with the big turbines on it. Pallets of wood often are on it. Anything that's strapped down on top of that flatbed is, and when you have a lot of rejections, it means that there are a lot of bids, and the bids are being rejected because there's not enough capacity in the industry. So it's a measure of capacity utilization in flatbed transportation.
so when people are saying no, that's a good thing.
Exactly, because it means you have more demand than you have trucks.
I've been rejecting a lot of tender flatbeds lately, sleeping on the floor at the recommendation of Dr. Hicks.
His flatbed's a little redundant, though, right?
Yeah.
Just saying.
Yeah.
I mean, I don't know how deep you guys get into pallet culture, but Ben brought up wood pallets. You know that there are tiers of pallets. You got your standard pallet. You got your Chet pallet, which is really the Rolls Royce of pallets. And you got to be careful if you're hypothetically unloading trucks that you don't break the Chet pallets, because those cost a pretty penny. Those are the ones that usually have blue edges and they're made of a thicker wood, but they're made by Chet, which is I assume a company that just makes pallets. I'm not sure what else they do.
It's good to
So
know.
there you go.
I wonder if there's any correlation between the tender bed rejections of the young guys out there on the dating apps and this economic read.
Yeah.
Just something to think about.
Also, when are we going to talk about renaming New York? Empire State, really problematic. We should really, it really should be the Indigenous Peoples State of New York. This is the Indigenous Peoples
All right, now we'll let Ben get back to his talking.
Manufacturing Report.
I appreciate the detour on the flatbeds. I think that's well.
The
it's
rest of it,
important to
maybe
know.
not as much.
The Empire Manufacturing, and so it's a New York State Fed survey that's conducted between March 2nd and March 9th. So this is obviously after the February 28th initiation of hostilities in Iran. What's very interesting here is new orders stayed very solid and actually accelerated in the month. Unfilled orders picked up. What was interesting to me, and Hicks, maybe you pull up the chart on this one, is price expectations. So price expectations fell, both on prices paid and prices received. So this is 6 months from now, which indicates that prices might actually be lower over, or at least certainly not accelerating as to the degree that they were in 6 months. So I think that's something to take note of, because it's different than what you're seeing in a lot of the press that's saying inflation is accelerating and we're going to have rate hikes.
And both were also lower in real time.
Yes, exactly. So it's not like they just spiked right now and now they think they're going to go down over the next 6 months. It's, these things prices are not accelerating to the degree that a lot of people are saying. And I know that we talked about the Business Roundtable survey on CapEx last week. And that was kind of the first sign that this CapEx cycle is broadening out. Well, we now have another sign, and that's capital expenditure expectations among those surveyed in the New York State area. And those are the highest since 2022, and are now discernibly moving higher.
Mm-hmm.
And so when I think about this idea of a big CapEx cycle, I've been a little bit circumspect about that. I've doubted that a little bit over the course of the last number of months, even as the market has been kind of moving that way. These data really start to support that. And so as I look at the numbers that are coming in, what I see is inflation is not as big of an issue. It's certainly not systemic. I think that, like I've said, I've been pretty clear about this. March and April are probably going to be a bit higher in terms of inflation, and people are going to get a little bit, nervous about that. But in terms of the systemic threat of inflation, I continue to think that's relatively low. Employment remains a mixed picture, but in general, I think the economy is in a pretty good spot. I just think that a lot of companies, and we've seen it with Meta even yesterday, laying off a bunch of people, but they're making record profits. This is not out of necessity. It's because they have too many people and they want to run the business more efficiently. And so it's going to be interesting to see how the Federal Reserve approaches this. And Nick Timiraos had a preview last night about what the Fed's going to do. So he obviously has an idea of what he wants the Fed to do. But I think he's not wrong, because I think the Fed has become more political over the last couple of years.
Well, it's interesting because Timiraos, and I'll turn it over to Tom, he'll have more informed thoughts, but he's really whining about it. It's happening again for the fifth year in a row. The Federal Reserve officials find themselves expecting inflation to fall back to their 2% goal, only to be confronted with another disruption that complicates the path. This is a high-level economic reporter for the Wall Street Journal. At what point do we just understand that unexpected things should be expected to happen all the time?
This is March.
Yeah.
And at least in the last 6 years, that's when things happen. So
yeah, it's just
the madness.
Tom.
Also, it's like the extremity is also the least. Lest we forget Putin's price hike or COVID-19 or any of the other things that have happened, this is the least impactful of all of those things, and inflation is at its lowest point. So what's I don't know. It's just, I still think that they're failing to see the unemployment picture devolving rapidly before everyone's eyes.
Tom, does the Fed have an agency problem? Because on one hand, they will. The word is that they don't even want to make a projection this quarter because they're supposed to make their projections on inflation.
I wouldn't want
rates.
to make it either because they're always wrong.
We forget that inflation was supposed to return to 2% in Q1 2023.
But if they don't want to make a projection, then they're kind of admitting they don't know, they don't have an idea even of what's going to happen, and therefore
they're not actually doing their job.
Why are they taking agency into determining the price of money if they don't understand what's going on in the economy? And I think that's an issue, as well as in all of these things that are mentioned, there's no culpability on the agency part of the Fed. Like, and nowhere was it, for the fifth year running, Federal Reserve officials find themselves expecting inflation only to be confronted with another disruption. Among those disruptions, notably, is not massive money printing and checks in the mail.
No, you get pandemics, aftershock, Russia's war in Ukraine, and a sweeping tariff program.
If you go back and look at a side-by-side chart of the federal funds rate along with inflation, at no point will you see the Federal Reserve being at zero and inflation being extremely high until we get to 2021. Now, the difference is inflation goes up, but they've already cut. Our interest rates were already at zero and had been there for years. The question is, well, what caused that? Well, it wasn't the rate being at zero, because we had all of 2008 through 2018 and rates were at zero and we were doing quantitative easing. But if you juxtapose that with a chart of M2 money supply, they are in lockstep. And now M2 money supply has gone back down and inflation is not going up. Now, fluctuations in oil are obviously going to change the price of things. That is a fact. The question is it going to be enough to have rampant inflation, like printing 67% of the dollars that have ever existed in a 10-year period? The answer is no. It just is a flat no. Are there more dollars today than there were a year ago? Yes. By what percentage? I don't know, roughly about 1%. So, I mean, that's really it. Like, our price is going to fluctuate because we've seen an increase in tariffs and we've seen oil prices go up. Yes. Is that going to quadruple the money supply? The answer is no. So I think that we should be very cautious of being like, man, cutting rates really accelerates inflation. What it does do is it oils the gears of the economy. It increases the speed at which money changes hands, which increases economic growth. Sometimes growth can lead to more money supply, which can lead to more inflation. But the Federal Reserve interest rate, I'm convinced, has very little to do with inflation. Very, very little. And I think that they don't know that. And that's a problem. But also the idea that, you argue so much, you're making this big thing, you're making sure that Nick Timrose is using a bullhorn to say how independent you need to be. Well, you were wrong in 2021.
Well, that's what I was about to say. Like, even the framing he has here when he talks about having to, do backflips to change their expectation relative to, for instance, last year, a sweeping tariff program. Guess what? They did those backflips, and guess what? They were completely wrong.
Yeah, you don't want to put the projections out because you said you thought you might need to raise 3 times. And there were multiple meetings where they raised multiple hikes because they were 5% off of their goal. And they said that they were going to, inflation was transitory and we were going to see a momentary blip. That's not what happens when you increase the money supply by trillions of dollars in just a matter of months, because you have to absorb that over time. But the problem is that timeline was short, and so we absorbed it all at once to the tune of 9% inflation. So you can't be independent and also be comically wrong all the time. And then you can't retroactively be like, well, I raised rates and that fixed it. But what really happened is we started running off the balance sheet and we stopped quantitative easing and started quantitative tightening. And that led to the money supply being restricted, which brought the speed at which we were increasing the devaluation of the dollar to a slower pace to about roughly 2% a year. I mean, that's just the raw math of it. So you can't be like, I need to be independent and then go drive your car through the front of your house and be like, sick, I'm such a good driver. And
I'm a fiercely independent driver.
And then take 3 years to rebuild the front door and be like, I crushed that.
For $2.5 billion.
Yeah. And like, hey, maybe we should talk about maybe taking your license away. You're like, whoa, bro, I've been able to drive since I was 16.
I'm independent.
Yeah. Like, you can't do that to me. So that's basically the scenario we have here.
What are we watching with the Fed? What's the key to you, Ben?
I mean, I think it'll be the market's going to play on the quarterly projections. I think that the whole thing is probably going to come out pretty hawkish. I don't think Powell is that concerned about the employment number because the unemployment rate is still quite low, even though, as we've talked about, a large portion of that is due to people dropping out of the labor force. And like the participation rate's low, the employment population ratio has fallen. It's not great. So I think that they need to be focusing a little bit more on that. I'm also interested to see what they say on private credit. I guarantee you there's going to be no culpability on the private credit side, even though, to be clear, the people who invest in private credit funds, that's the problem with private credit. Like, you didn't do your due diligence and understand. I mean, we've been talking about it since day one about the 5% gate on a lot of these funds, and you don't know exactly what you're invested in, and it's not. So they're the primary issue. Having said that, the Federal Reserve overregulated the banks to an extent that private credit went in and filled the void.
It became attractive.
And then they didn't regulate private credit. And it's fine. That's not in the purview. But what they did do is they kept interest rates high, which now means that none of these investments are transacting. So all these private credit funds are going stale, and people are wanting their money back, but there's no money there because they're not able to actually sell assets. So again, this is not a Federal Reserve created problem, but the conditions that the Federal Reserve has set around it have contributed to that problem.
Yeah, you make cocaine illegal, and a man goes out and ends up having fentanyl in the stuff he bought on the street. You know,
it's exactly like that.
And this is why we need to deregulate. I think.
So I'm curious what no one's going to talk. No one's
like,
talking.
You like that stuff? Try this. It's even more powerful. And I'm like, ooh, I should put that up my nose and dead.
No one's talking about how any Federal Reserve comment on that private credit side, but I am interested in that. The other piece, of course, is going to be, is Powell going to stay on after his term as chair ends in May? And I think there's a decent chance that he will.
I think he is. He's got to keep fighting the good fight.
Yeah, he's a real hero if you ask him.
Let's talk AI. NVIDIA now forecasting $1 trillion of sales by the end of 2027. We've got a big keynote from Jensen Huang. How are we feeling about it? Ben, to the haters out there who would say this is their last real run, do you think these projections and this news makes them second guess it?
It should. The market is saying one thing, though, and Jensen Huang saying another. Jensen Huang is one of the only people who have consistently proven the market wrong. But right now, I mean, NVIDIA stock is not going up on good news. It should have gone up on this news yesterday. They have new partnerships with, digital twins, with robo-taxis, like with BYD, which is a huge auto manufacturer out of India.
Do you think we're being trolled by Jensen Huang? But he's announcing a new rack called Digital Twins. Just a question. Sorry, continue.
I thought when I had that in the notes about anyway.
Sorry, Ben.
We're killing Ben today.
But I do think here's the economics behind why this could work. So NVIDIA is going hard into inference chips, and what they're talking about is the new system can generate 700 million tokens per second, which, I mean, if you're using Perplexity tokens, it costs about $1 per token. And so if you think about this, $700 million per second this can generate.
So much money.
For Perplexity. So that's where the $700 per second. But that amounts to $900 million per year if you're fully utilized. So this is how companies will make money. And what you're seeing is OpenAI and Anthropic, they're both now shifting gears massively into enterprise and business applications. And Jensen Huang even said this, we're moving from software as a service, and this is really important. We're moving from software as a service to agentic AI as a service. And companies that can manage that shift are going to succeed, but software companies that don't manage that shift are going to fail. And so the sales forces of the world need to shift to agentic AI as a service, but that's going to have a different business model. It's going to be paid based on tokens versus seats. So the number of tokens you use, we might have one subscription, but we might blow through millions of tokens, versus the previous model of software is we might have 6 software licenses that renew, subscriptions that renew annually, and it doesn't really matter how many tokens. But that's the shift that they're playing. And ServiceNow is a great example. They're making that shift in their business model. They have a tokenized platform where they're charging for that. But other companies are still charging based on seats. And if you're charging based on seats, it's not going to work.
Man, who's going to mop up? Charles Entertainment Cheese. Big token guy.
Old Chuck.
I don't think, does that company still exist? Chuck E. Cheese still in business?
Yeah, there's one,
There's one
right by
there.
me.
Yeah, about once a year, Martin gets invited to a party there, and we have to come up with some way to make sure he doesn't know about it. So
Yeah.
it's dark in there, man. It's a real depressing place. OpenAI, Ben, to your earlier point, making this transition more to the tokenization. SEC is proposing to eliminate quarterly reporting, move to a semi-annual cadence. Is this good or bad?
I think it's good for analysts.
Yeah.
It's also good for senior management and who can chart a strategic level. It's good for entry level who don't have to be stuck in the quarterly quagmire of just getting things ready for the quarterly report. It's going to be tough for upper middle management. I think this just kind of speaks to the theme that we've been talking about for a while, is that upper middle management teams, is going to be a lot of onus on them, whether it's with AI or whether it's with semi-annual reporting, because there's going to have to be a lot of self-direction and self-motivation and planning in order to hit milestones and take advantage of the bigger gap in the calendar. If you're on a quarterly schedule, a lot of middle and upper management are just kind of, running and gunning for each 3-month period. If you're on a 6-month schedule, a lot of them could get lazy, but the people who don't get lazy could accomplish a lot more. So I think you'll see this is where, again, culture becomes incredibly important and true, like working culture. So I'm curious if this becomes rule. It'll go to public comment here probably in April. Then there's a 30-day public comment period, at which point the SEC will vote on it. So we'll see. I think from my perspective, I would like it.
Yeah.
I mean, it's been one of those things that's kind of been pushed. It's been bad around for my entire career, I feel like. Elon Musk was a big proponent. He's been saying they don't want to do quarterly reporting for a long time.
Mm-hmm. Oil's still under $100 a barrel, but quite a bit of volatility. Lots of news coming out on the war. Trump specifically saying that the U.S. is winning, and now they think maybe the sun is gone. They're all gone. My biggest problem is I have no idea who I'm talking to because nobody ever heard of any of these people. They're all dead. So if you're looking for war analysis, we've got that. It's still really hard to tell what's going on.
Yeah, I think the market is saying that the U.S. is in a better position on oil, whether that's Iran letting ships through the Strait of Hormuz or ships coming or alternative ways to get oil. The market's a little bit calmer on oil. I mean, we're still, like you said, under $100 a barrel. Trump said he doesn't think we'll be able to wrap up the war this week, but it will be, quote, soon. He did say he talked to a former president who is unnamed. CNN, of course, fact-checked it and checked with all the living former presidents and said he hasn't. None of them have believe he's been in contact with them. So CNN actually had a hypothesis that the former president was Trump 45.
I actually would love it if that was true.
That's actually would be a really funny.
If he was like, I actually talked to the 45th president, and he thought I was doing a great job.
He said I should. He said if I had to do it again, I would have got it.
That is funny.
And he did.
You're good enough. You're smart enough, and gosh darn it, people like you.
I actually have a theory on who he did talk to.
It was Clinton.
I completely agree with your theory. I think it was Obama.
You think so?
I completely agree. So I think Bush hates him.
It could have been Biden, and Biden wouldn't have remembered anyway.
Yeah.
He's like, we're friends, right? And you're like, yes. He's like, you're awesome. Thanks, Joe.
If it happened and it was a president other than the 45th president, I think it was Obama.
I think Clinton would have admitted it. I just don't think that would have been a story.
I think Clinton would have said it like stumbling around on the street someday, and like it wouldn't have been.
I mean, Clinton behind closed doors definitely thinks that like half the stuff that Biden did was absurd, right?
Yeah.
And I think Obama thinks it is.
I mean, politically, President Clinton in office was far more aligned with President Trump ideologically.
Oh, completely.
Like, it's almost
If anything, Trump's
as
just
close as two presidents have been ideologically.
Clinton might think Trump is way too progressive.
Yeah.
And on Cuba, we have not made a decision yet. Another all-time quote here on Cuba. It's a beautiful island, great weather. They're not in a hurricane zone. They won't be asking us for hurricane money every other week. All my life, I've been hearing about the United States and Cuba. When will the United States do it? I do believe I'll have the honor of taking Cuba. That's a big honor. Taking Cuba in some form, whether I free it, take it, I think I could do anything I want with it, if you want to know the truth. They're a very weakened nation, very violent leaders. That's how they govern, but a lot of people would like to go back. So,
I mean, he's a casino guy. People forget that
Yeah.
Cuba used to be a casino spot. The Atlantic City of the Caribbean, a lot of people are saying.
and then Trump also doing a victory lap on behalf of the Venezuelan baseball team in the World Baseball Classic. Wow. Venezuela defeated Italy tonight 4-2 in the WBC semifinal. He did add parentheses baseball. They're looking really great. Good things are happening to Venezuela lately. I wonder what this magic is all about. Statehood, number 51, anyone? President Donald J. Trump.
Man, what a super team that would be.
Yeah, man.
Shout out Ronald Acuna.
Yeah. I mean, can you imagine just...
He's probably listening, right? He lives
Yeah.
nearby and
Yeah.
speaks English.
Yeah, he's definitely a super user. All right, we'll wrap it up there. Fun call. Y'all have a great day. If you get a chance, swing by in the office and pinch Ben. He'd love it. Talk to you soon.